Hey everybody, if you're watching on YouTube, you can see that I'm coming to you from the Flatirons above Boulder, Colorado. I'm out climbing today. Before we get to today's podcast, which is definitely one of my favorite episodes, I have a funny story for you. So this podcast, Compounding, is sponsored by my company, Swell. And in our last board meeting, one of our board members, Alex, said, "Hey, I really like the podcast, but I noticed that you don't even mention Swell." It's a good point, so Alex, this is for you. I'm going to give you the elevator pitch for Swell, and I'd be really interested in hearing your feedback. So give it a listen and then email me at kevin@swellmoney.com and let me know what you think. And more importantly, tell your friends about Swell. So what is Swell? Well, Swell is a banking app that helps you build wealth. And why is that important? Well, because banking is broken for most Americans. Wealthy people get access to the best loans, the best investments, and the best services, while normal, hardworking Americans are mostly ignored. Here's a shocking stat for you. Last year, the biggest four US banks alone had record profits of nearly $124 billion. That's profit, not revenue. But 98% of the people we surveyed said their bank does nothing to help them get ahead. So we help our banks become wildly profitable, but what do they do for us? Well, the answer for most Americans is not much. Swell was founded to fix that, to bring the best of banking and investing, the smartest money moves, to everyone. We're not a bank. We do things banks don't do. The Swell app comes with 3 integrated financial products that are designed to work together. It starts with Swell Cash, which is a digital checking account that helps you control spend. Next is Swell Credit, which is a personal line of credit that helps people tackle debt and can replace higher interest credit cards. Most people don't know that the average American with credit card debt pays over 21% APR on their balances, and Swell Credit can provide a better option for millions of people that struggle with credit card debt. And finally, there's Swell Compound, which is coming soon. It's my favorite feature, and it's the one that a lot of people are talking about. It's our take on private equity investing. We focus on real estate. Compound is designed to help people build wealth through private market real estate investing. And these are investments that normally require that you be an accredited investor, that you have $100,000 or more to invest, and that you have some expertise to be able to evaluate the investment. Compound takes care of all of that for you, and you'll be able to start with as little as $1,000. So the Swell app is in app stores today, but you need an invitation code to get access to the app. And the way to get an invitation code is to sign up at our website, swellmoney.com, and join our community. Hey folks, welcome to the Compounding Podcast, where we talk to the very best at what they do, and we look for things that we can apply in our daily lives to compound everything. Today, we're coming to you from the beautiful Outer Banks of North Carolina. You're going to want to watch this one on YouTube if you can. Right behind us is just an incredibly spectacular backdrop. And also, we're going to give you a look at something really cool that's related to our conversation today. So check this out on YouTube if you can. Today's guest is my friend, Richard Fertig, the founder of Stomp Capital. Welcome to the Compounding Podcast, Richard.
Kevin, thank you so much for having me. And also thanks for coming down here.
Richard invited me to spend the weekend at his spectacular property here, and it's just been amazing. And we're going to give you a sneak preview of that property at the end of this podcast. So stick with us. So just a quick background, and then we'll dive in. So a long time ago, someone told me that the secret to living a great life is really simple. You simply do cool stuff with cool people. And over my life, I've found that to be very true. If you focus on just doing cool stuff with cool people, things like money and happiness tend to take care of themselves. And Richard is someone who definitely checks both boxes. I mean, I met Richard on Twitter, maybe a year ago. We became fast friends. And it's not just because he's doing all this incredibly cool stuff that we'll talk about, but he does everything with style, and your energy is infectious. So I was super excited to do this podcast. So maybe we'll start, for our listeners who may not follow you on Twitter, maybe just give a quick background on yourself and on Stomp and kind of what you're up to.
Sure. Well, first and foremost, I think that the idea that you mentioned about like doing cool stuff with cool people is something that we really want to underscore. And I have this philosophy, which is like you live once, one life. And so every single day is important, and you're either maximizing it or you're not. And so full send energy, everything full tilt, just always doing what we want to do and being in what I call peak state is something that we really, really live by. So thanks for highlighting that. As it relates to what we currently are up to here at Stomp Capital, let's take a step back. I started my professional career as an investor. I worked at firms like the Blackstone Group and eventually became co-head of investments at Ramius Capital Group. We ran a $4.5 billion fund and investing globally in mispriced mispriced opportunities. And the basic premise, what the top institutions, pension funds, endowments, and so on came to Ramius Capital for was for equity-like returns with bond-like volatility. And so it really formed the way that we think and we approach investing. We're always looking for contrarian plays or mispriced opportunities. And the basic idea is to find asymmetric risk return. We like to take as little risk as possible with as much upside as possible. And one of the ways that you do that is you identify emerging asset classes before they become mainstream. And so that same sort of lens is what led me to really start to focus on short-term rentals. I've always had vacation rentals. In fact, the first property I ever bought was out in the Hamptons when my ex-wife and I lived in a rental apartment in New York City. We bought an investment property in the Hamptons, and just renting it out for the summer peak period allowed us to carry it for the entire year. So since 1998, I took my signing bonus at the Blackstone Group, bought a vacation rental in the Hamptons. We enjoyed it in the off season. And so it's something that I've always recognized the value in. And then with the emergence of Airbnb, really started to dabble more on a personal level and realized it was working everywhere that we were investing. Decided very differently than my prior life when I was in the hedge fund world to actually share the wealth. And I launched a short-term rental university YouTube channel that now has about 75,000 or so subscribers, literally sharing how-to best practices, and very different than the hedge fund world where I literally would have been fired if I'd been speaking to the press or on a YouTube channel or a podcast. I was sharing the secret sauce, and it's very rewarding that I've changed the lives of tens of thousands, maybe hundreds of thousands, over 5 million minutes of views, and just things that I could never imagine. And that ultimately led to me launching Stomp Capital, where I'm the single largest investor, and I'm inviting people to co-invest alongside me as we really discover and design and define what this asset class looks like and continue to push the bounds. So I hope we get into some of the weeds about how we view the space.
Oh, we're definitely going to get into the weeds because I'm just absolutely fascinated by what you're doing. And in fact, last night I had the thought that I think what you're doing, and we're going to get deep into it, is the most interesting thing that I've seen in real estate. I think your vision is huge, and so I want to really get into it because I think people will find it really interesting. But maybe a good starting point would be, let's talk a little bit about this, where we are right now, this amazing property. And again, we're going to do a tour of this property. So, make sure to check that out on YouTube, but we'll do that at the end after this interview. But just give us an overview of where are we sitting right now?
So we're sitting here in Salvo, North Carolina, the Outer Banks of North Carolina on Hatteras Island. And I came down here to learn how to kite. It's not a very windy day out there. So anybody watching us on YouTube, you're not going to see dozens of kiters, but this is one of the best places in the world to learn how to kite and to kite. And so I came down here to learn how to kite. It wasn't a real estate play whatsoever, and quickly fell in love with the area and found some incredibly interesting. Again, everything we do has a value add. We roll up our sleeves. We define the opportunity set. We're not just beta riding and hoping that the vision that we have is like successful. We're actually creating the alpha. And so what started with buying some land to take advantage of this opportunity has quickly become 50 plus acres. We have a decade or more of development. We're the single largest landowner here on Hatteras Island. And what we're sitting in right now is EdgeCamp Sporting Club, which is the brand that we've created for Hatteras Island and some of our other locations that have sporting themes. And this is our flagship home. This is the first home we built. It's 12,000 square feet. It's 14 bedrooms. And it's used for corporate offsites and family gatherings and small events. And, it's absolutely remarkable, and thrilled that you and your wife and team could come down here and experience some of the hospitality. And, the key word there is experience, because I very much believe in the short-term rental future. It's no longer about lodging. Lodging is, you take that for granted, and the cleanliness and the consistency and all the things that people say don't really work in the short-term rental space. To us, that's baseline, and that's not that exciting. But what is exciting is creating these experiences and these moments and the way that we design the homes and the views and everything else. I very much view our job as like directing your experience, your eyes, what you focus on, what you do. And so everything we've done here at EdgeCamp Sporting Club is to highlight the outside. There's very little art, for instance, and that's intentional. There's no TVs in the rooms, and that's intentional. The reason is we want everybody to be together in these common spaces like you and I are sitting in, and be outside and recreate and do these incredible things to get into that full send peak energy type mode.
Yeah, well, so much to unpack there. I mean, and really, the way I think about what you're doing is you're creating a new asset class. I mean, yes, you are doing short-term rentals, but you're not just buying houses, refurbing them, and then renting them and trying to aggregate a big portfolio. You're a big believer in, creating destinations from the ground up. And there's a very specific reason for that. You want to talk about that a little bit?
Absolutely. So these are concepts that I've developed over the years on the YouTube channel. So maybe for the audience that's not familiar with the evolution of the asset class, let me just give a minute of background. So Airbnb is 10 years old, literally, right? Like it's brand new. 10 years ago, when you launched anything on Airbnb, I call that STR 1.0, it sold and you were remarkably successful. You could put this chair, a couch, your van, it didn't matter. There was so much demand and so little supply that you could succeed in spite of yourself. Over the last few years, with the introduction of my YouTube channel and others, people have become professional hosts. And so where we are today is STR 2.0. You have people that are literally quitting W-2 jobs. And I get DMs all the time from people that say, I quit my job that I hated, and now I've got 4 or 6 or 10 properties, and it's changed my life, and I'm spending time with my kids, and it's really both rewarding, but quite successful. And what they're doing is what you said. They're buying existing homes in legal areas, and they're turning them into short-term rentals, and they're dedicated, and they do a very good job. But there's a lot of inconsistency around that. And it's a lot of mom and pop. And so that's why it hasn't really scaled to institutional buyers yet. Where my team and I are focused is currently on STR 3.0, and we're starting to spend some time on STR 4.0. So STR 3.0 is we're no longer providing just lodging. We're exceptionally talented on the hospitality end. We're exceptionally focused on creating experiences. And so like the EdgeCamp Sporting Club brand is all about the best location for kiting, the best location for surfing, the best location for skiing. So we curate all this. These are places that are maybe difficult to get to or don't support a hotel. So you have to custom build properties and access and location. And you're now pulling demand from a very specific niche. And the reason that we want to do that is, 1, it creates loyalty. 2, it creates raving fans that tell other friends they can't get this anywhere else. And 3, we have what's very important from an investment perspective, pricing power. People are no longer comparing our lodging option on either Expedia or on Airbnb, because what we're doing, they can't get anywhere else. And then just to touch on STR 4.0, where we're already thinking is a membership component. So people that are active like yourself, if we understand you and your lifestyle and we have enough locations and say, hey, Kevin, I know you're big into rock climbing, for example. Would you also like to try surfing? How about kiteboarding? How about skiing? And so now all of a sudden you have a place where people that are active and seeking this kind of adrenaline and excitement and peak performance, there's no other competition either in hotel brand or Airbnb or anything else like that. So that's a little bit about how we create the asset class. And to underscore what you were saying about the institutionalization of it, once we have a sizable portfolio measured in the hundreds of millions or even billions of dollars of global assets, and it's turnkey with a brand and with real net operating income, at that point, somebody like my prior employer, the Blackstone Group, or maybe it's Starwood Capital, or maybe it's Red Bull. I mean, there's a lot of people, Patagonia, there's a lot of people that would be interested in that sort of big turnkey portfolio. And once it's assembled and done, it'll be obvious. It'll be like, why didn't I think of that? And I should have done it. Well, we did think of it and we are doing it.
No, the best things, the best businesses are only obvious in the rearview mirror.
Right.
And so you guys are creating a lot of alpha here. I just want to highlight that, really what you're doing, you're not just, providing lodging in destinations that people want to visit. In some ways, you're creating the destination. You talk about like it being in hard to reach places that are just spectacular, that lend themselves to maybe even very specific types of activities. And then the other thing is I am a huge believer from an investment standpoint in aligning with long-term macro trends.
Right.
I believe there is a major macro trend happening in the travel space away from sort of big hotels and resorts, even luxury hotels and resorts, and toward more curated experiences. And I can just speak for myself as a avid traveler. We like to stay in nice hotels. If you look at a nice hotel in any destination, let's pick Hawaii. If you want to go to Maui and stay at the Four Seasons, you're paying $2,000 plus per night for a cramped, tiny little room, a fairly crowded resort in a busy part of the island. And I just don't believe that the modern discriminating traveler is seeking that as much anymore.
I completely agree. I mean, there's a time and a place for it, right? Like, I sometimes like to get pampered and we'll stay at the Four Seasons or the Aman, or there's wonderful companies. And there's a time and a place, but that's not every time and that's not every place. For instance, the Four Seasons couldn't build something here because the zoning doesn't allow for it. There's not enough consistency. They need, 200-300 keys in order to make it worthwhile. So that business model doesn't work here. But you're picking up on a few things that I tweeted about and we've actually written about at the Stomp Capital website. So if people want to learn a little bit more about it, but the way that we invest and what I learned at the Blackstone Group and at Ramius starts with a top-down asset allocation. Where do we see opportunity going forward? And it's all forward-looking, right? Like we're not investing ever in what's working now because our bet and our knowledge is what's working now will eventually stop working. Too much capital comes into the space, cap rates compress, and now what you have is a very expensive asset class with a lot of risk. And we're doing the exact opposite. We're looking for a very inexpensive asset class with a lot of upside. So we take the opposite view and it's forward looking. And so the way that we do that is we try and identify what we call mega trends in advance of them being obvious. So you picked up on one. We very much believe that experiences trump luxury, even though there's a place for luxury. And what we do at EdgeCamp, for instance, is experiences plus luxury, right, which is even better.
Luxury's become a table stake. I mean, you can find luxury anywhere. What's hard to find is experiences.
Yeah. And I mean, how much can we out luxury one another, right? We can all have the same sheets. We can all have the same china. We can all have everything else. But what you can't have is warmth and love and experiences and all of these other things. And that brought us to a second megatrend that we identified, which is that community is much more important than being anonymous. And so when you talk about the Four Seasons, whether for better or for worse, we've all been trained that it's like a kind of communal space, but everyone respects each other's privacy. So you might be in the lobby and you're making no contact with anybody else, no eye contact. You're at the pool, you're letting your neighbor sit and enjoy their day, whatever they're doing. You're not making any friends, you're not doing anything. And what we very much believe is, especially post-pandemic, we all crave affinity groups, cohorts, like-minded people, a lot of diversity. We're not seeking the exact same thing, but if we're all pulled together for, say, skiing or rock climbing or whatever, you're much more likely to break into conversation with somebody around the pool and say, hey, did you climb this? And I don't know enough about climbing to speak intelligently, but I'm just using it as an example.
Right. Yeah, no, it's amazing. And I want to kind of use that to segue into the property itself, the buildings, really are a big part of creating this experience in this community. Talk a little bit about, and for this property or just in general, I mentioned earlier this idea that you like to build ground up because you don't believe that most existing structures are conducive for the kind of experiences that you want to create. So talk, and we're going to show some of this at the end of this episode, but talk a little bit about maybe this facility or this property and the things that you've built into it to help you create those experiences or create that sense of community.
Totally. And I think that's STR 2.0 is taking existing buildings and just putting them on, say, Airbnb, right? So it's lodging, retrofit, and you can paint murals and you can put new paint on and you can change the design and decor. And you're going to need to, by the way, in order to even stay relevant. But I think that that's very much what's working now, and it's not what's working in the future. And the way that we kind of view the asset class is we want to take the best of, say, the hotels, the best of, say, short-term rentals. We want to minimize the worst of hotels and minimize the worst of short-term rentals. And then we find in like the charts, this unique blue ocean strategy of what should be. And there we define our mega trends like community. So for instance, on this top floor here, it's designed to be completely open so everybody can come upstairs and interact. And yet it has different breakout rooms. So we're sitting here recording this podcast in one of the two primary sitting areas up here, but there's a whole nother one and there's other little breakout areas in different rooms. And so on different floors. So when people come for, say, a corporate offsite, the sales team could be on one floor, the marketing team on another floor, they're doing exercises, then they come together. We've built a commercial kitchen here. So we have chefs that are, available for people that want that. And they can come one time a week, 3 days a week, whatever you want. We have people that come, every single meal is prepared for the entire week. So it's all a la carte amenities. We provide resort-like hospitality, but all a la carte. So people are paying for what they want. They're not paying for what they don't want. And when we design the buildings, it's intentional so that we know who's coming, what they're doing here. All of the bedrooms are en suite. They're all master bedrooms. So there's not one that's better or worse. You are in the private villa, which is maybe the honeymoon suite. We have had a couple of weddings here. So we very much design this as like, this is a short-term rental. And the way that you live in a short-term rental for, say, a week or a month is very different than the way you might live in a house for 30 years. So that retrofit product, we don't think is the best of short-term rentals. And consequently, we build what we believe to be the best of short-term rentals.
And this is a great example of why Johnny and I travel to do these podcasts, because when I meet with somebody and I see what they're doing, I want to experience it. And I will tell you, having been here for the weekend, pictures don't do a place like this justice. I mean, they never do. And when you experience a place that is purpose-built for all the things you just described, it clicks in your mind. It's a game changer. And, for me, I'm kind of over the whole, like, being in a cramped hotel room and waiting in line at a buffet for breakfast. And, when you have a place that's purpose built and has the best of all worlds, you've got more space, which is really important to me. You've got some of the home-like amenities. Like this morning, we went in and opened the fridge and pulled out some bagels, and, you've got those shared spaces. You're away from the crowds a little bit, which I think, increasingly travelers, they don't want to be in the so-called tourist hotspots. They want to be at these destinations that are gorgeous and have all the things they want, but aren't crowded. And so it really is. You have to experience it to understand, and hopefully we'll capture a little bit of that later. So all that said, I got a taste of the experience. It's awesome, but I'm also like, I put on my hard-nosed investor hat. And you took us on a tour of some of your properties here in the Outer Banks last night, and I asked you 1,000 questions, and all of it was just I am an active real estate investor, and I'm really intrigued by this opportunity. And so I want you to talk a little bit about the investment side, but I'll give you a specific starting point.
Cool.
Which is one thing that really caught my attention was this idea of the cost basis.
Yeah.
Right. You're coming at the beauty of creating destinations in these amazing places that are maybe not fully developed is you come in, you can acquire property at a low cost basis. You can create all the alpha, which both protects your downside in a huge way, but also provides much more upside. So hopefully I captured that.
Yeah.
Talk a little bit about that.
Yeah.
Because that to me is sort of, in a way, the genius of what you're doing.
So I think it goes back to, again, my like Wall Street training days, where what the average investor does, whether it's multifamily or even in short-term rentals, is you take a look at like historical data, right? So on the short-term rental side, there's AirDNA, and it'll give you projections of what, like, I don't know, a place in Palm Springs might do. And so the average investor who's looking at what's working right now is taking a look at readily available data and then just analyzing what they think is going to do going forward. The challenge with that is that there's no guarantee that what happened in the past will happen going forward. And we're at the first time right now at an inflection point on Airbnb where there's more supply than there is demand, right? So like for the last 10 years, there's been more demand than supply as mom and pops are getting more and more invested and understanding of the opportunity set. They're buying more and more of these retrofit STR 2.0 homes. And consequently, we're at a turning point where there's finally more supply than there is demand. And And I just don't think that that's sustainable going forward. So we avoid all that. Instead, what we try and do is find activities and sports and locations where we think, and I'm sort of like the target market. If I like it and I want to go there and I'm willing to make the trip, then my bet is that other people will too. And historically, we're right on, right? So we have another property in Nosara, Costa Rica, which will be our surfing center. We're tearing something down and we're building a brand new custom purpose-built, incredible property in Nosara, Costa Rica. And since I identified Nosara, Costa Rica as a place that was emerging and really wonderful, I can't tell you how many people are now like, oh, I'm going to Nosara. I want to go to Nosara. It's important to me. So we're constantly looking for these new opportunities to define the location. And what was used to be, like in the prior world, say, pandemic, a negative, like, oh, it's hard to get to. We turn everything that we do is contrarian and opposite. Hard to get to for us means it has yet to be discovered. And two, if it's worth going, then you attract the really hardcore people, right? So like for me, the eye-opening situation was, I'm a big avid skier. I live in Jackson Hole, Wyoming. I try and ski 50 to 100 days a winter as much as possible. And so for my 50th birthday a couple of years ago, a bucket list item was to go heli skiing. It took me 2 days to get deep off grid, like in British Columbia. And the eye-opening thing was that when I got there, there was 58 other people there, and they had traveled even greater distances, some from Japan, some from Mexico, some from Australia, and they were all hardcore committed in skiing. And my fiance and I were the only two people who had never been to that particular lodge before. Everyone else had been there at least once. Many of them go every single year. Some have been going for 20 plus years, and this is part of their life. Like salmon, they just return. So 100% occupancy, premium pricing, passionate following, hard to get to. And so you are attracting the people that like want that experience and they can't get it anywhere else. And that's very different. And that doesn't get reflected in historical data. You have to create that.
So much to unpack there, but a lot of it resonates with me. I think, today busy people crave meaningful experiences.
Exactly.
And in some ways, the value of the experience is directly correlated with the effort required to obtain that experience. And so I think this idea of places that are kind of hard to get to, off the beaten path, but are special places that require a little effort to get to, but then having an amazing experience there. I mean, those are the things we carry with us for life. So I think that is right on trend. And this idea, again, flipping back to the investor side, by identifying these emerging spots and getting in early, you're keeping that cost basis low. And so I think about it almost as from an investment standpoint. Your downside is that you have an STR 2.0 in a desirable location, right?
Right.
You're cash flowing, that's fine. But what you get with this is that you don't get in some other asset classes that are more mature is the upside, which is if this thing plays out as as you hope, right? That you create this network of branded locations across the world, and 1 + 1 = 5 or 10. Right. Then you've got the upside. But again, your downside is it just becomes a nice cash flowing STR asset in the portfolio.
Well, so from an investment perspective, there's a lot of different things that we can talk about. The first one that I think is really important is that it's mispriced. The zoning, the legal right to short-term rent is mispriced currently, or said differently, investors aren't valuing it properly. So in the STR 2.0 world, where you're just buying like existing homes and turning them into short-term rentals, to do that in a legal place, you're basically buying on comps. So what Mr. and Mrs. Smith paid for the house across the street is what you're able to buy this small business for. And the fact that it's generating, say, $250,000 worth of NOI is not in the price at all. It's price per square foot, the number of windows and this and that. But yet every other real estate asset class, industrial, commercial, retail, multifamily, everything else, the only thing that matters is the NOI. Yet the single largest asset class in real estate, single family homes, it's carried at zero.
Right.
Now, it doesn't take a rocket scientist to say, well, over time, as this asset class matures, the net operating income for a single family home that's in a legal short-term rental location should not be carried at zero. It should be more than zero. And my personal belief is it'll be significantly more than zero. So we're acquiring intelligent zoning rights as much as possible, as quickly as possible. And then we do some interesting things where we turn it around on its head. So our single largest purchase so far in the Stomp Capital Fund is a 62-key motel in Southampton, New York, in the Hamptons. And the reason we purchased that is because of the zoning rights. There will never be short-term rentals in the Hamptons, I don't believe. There will never be more hotels built in the Hamptons, I believe. And yet it's one of the most desirable places, 90 minutes from New York City. So you have millions of affluent people that want to go there. And a starter home costs $3 million and it comes with headaches and so on and so forth. And so our forward-looking view is if we provide an alternative where people can get the hospitality and the experiences in the community, the value of that zoning will be recognized. And I'm happy to say we paid $13.5 million for it. We closed in late April, so 4 or 5 months ago. We've already received unsolicited bids for $16 million, $17 million, $18 million. And just yesterday, we got a bid for $20 million. So the world is waking up to the fact that the zoning is really, really valuable. And we're just finding new places before others.
Yes, such an important aspect. The zoning is probably the single biggest risk factor in STR, especially if you're buying individual properties in hot destinations. Overnight, you know, the law can change and all of a sudden STR, I mean, where I live in Boulder, STRs are not allowed.
Right.
And so a big part of your strategy is acquiring zoning rights, essentially.
Totally. And we do a lot of work, again, you know, using sort of our due diligence that we created at Wall Street firms. We go in, we do legal due diligence and compliance due diligence and zoning due diligence, and we work with civil engineers and legal teams. And we're, again, not just like buying something that we think is legal. So for instance, here in the state of North Carolina, we analyzed sort of the state's dependency on vacation rentals. This particular island, the reason it was depressed and we found great value in it was, again, there was a bridge that came to the island from the mainland. It was built in 1963, guaranteed by the U.S. Army Corps of Engineers for 30 years. So in 1993, it was no longer deemed safe passage. And from 1993 until when I got here in 2017, the state of North Carolina was trying to figure out, like, what do we do with the old bridge? How do we raise money for a new bridge? How do we do this in an environmentally sound way? And so over 20, 30 years, this bridge continued to deteriorate. And it was literally the oxygen coming out of this island. So we came here and we bought land for 10 cents on the dollar. We're still below all-time highs, so it's still a value. And we did a lot of understanding about the importance of tourism to North Carolina. It's their single largest revenue driver. That's why they built a new bridge and poured $1.5 billion into this island for safe access. It's guaranteed for 100 years. And then we took a look at sort of like rights from HOAs and so on. We acquired all the land, so we are our own HOA. So we will be preserved in perpetuity to operate this legally. And this is the kind of diligence that we do and the opportunities that we look for. Again, we're not here saying, oh, well, it's working for Richard, let me piggyback off that. We're defining the opportunity. We're doing all our homework, making sure that we're, have a very long runway for our business. And, it's hard to do. It's not done by everybody, but that's the opportunity.
Yeah. Yeah, we were joking last night at dinner that Richard and I both tend to choose max difficulty ventures, but I think there's some method behind the madness. That's where all the alpha is, right? It's great things aren't easy.
You know what? If it's already being done and it's already cash flowing and it's already a known quantifiable entity, I think the upside is limited.
Yeah, for sure. And again, what I like about what you're doing is, the downside is STR 2.0. Like,
right.
So, what you've done, and I'm speaking specifically because you gave me a pretty good overview of what you're doing in the Outer Banks. You're the single largest landholder. You've got lots of property, lots of acreage here, and you've got cash flowing assets that sort of, allow you to carry all of this land, this opportunity. And, the downside is that those just continue to cash flow. The upside is by buying early and inexpensively, you've got optionality on literally surrounding this house we're sitting in right now. You own acres and acres with future potential for all sorts of things.
Yeah. And we can, speed up the development. We can slow down the development. We can change the development. Again, one of the things that I really love doing from an investment perspective is maintaining maximum optionality. we don't need to have all of the answers right now. We can let this thing unfold and figure it out. But in this acreage, we're trying to figure out this membership model. So what sort of amenities, clubhouse, activities, what else can we do so that people that are staying here at EdgeCamp Sporting Club will only stay here and in fact want to join a membership and bring their friends and family and loved ones. But yeah, it's really exciting and it's really rewarding. And we get paid to do the work, right? I gave you the example yesterday, a house that I'm looking at, I don't think your viewers can see. We just finished this year. I think the total all-in basis for the construction and the land and so on was about $1.8 million, and it was appraised for $2.55 million, order of magnitude. Don't hold me to it. But so in doing the construction, we're also generating about $800,000 worth of profit that we can then cash out, refinance, and use for other things. So it's a very interesting business model, has a lot of opportunity and a lot of upside. The cash flow is very strong, again, due to the low cost basis and low leverage. And we tend to be very conservative. At the Stomp portfolio level right now, I think we have less than 30% loan to value because a lot of the things that we've bought, whether it's land or I showed you the area that we're going to develop for single 1-bedroom overnight stays with workforce housing and all that, we paid all cash for that because they were basically giving it away. Nobody was interested in buying it. They didn't understand the space. We looked at it. We changed the zoning from commercial and retail to motel. Before we bought the place, we worked to change the zoning. Then we also recognized that the existing motel laws required somebody to physically be there 24 hours a day in case you got locked out. So we worked with our team to change the law so that we could do self-check-in, right? The advent of Airbnb allows new processes. We worked with the county to change the law. So we've now changed the law. And then after that, we closed on the property. But because it was given away, we got the land for free. We got the building for less than replacement value. We got this optionality for workforce housing. It's an absolute home run of an investment because our basis is so low.
Right. Yeah. So I told you last night, in what you're doing, which is, creating this new asset class, both the opportunity and the challenge are that you are pioneering, right? So you're having to, figure a lot of this out as you go. But that's also the opportunity. That optionality is opportunity. And I'll contrast that with another asset class that, the biggest single chunk of my net worth is in multifamily, the multifamily asset class. And obviously it's been an incredible asset class to be invested in. Value add multifamily over the past 10 years has had an epic run. But you have to ask yourself, will that continue? Because the formula there is pretty straightforward. It's very well defined, right? You buy a apartment complex, you do some refurb, some value add, and you maybe raise and stabilize rents. You ride it for a while, then you refi or sell. That's a well-known opportunity. And, I'm not sure, the historical 30% plus IRRs, I'm not sure they're going to be there anymore. So for me as an individual investor, I think about what's the next frontier. I do believe all the mega trends, as you said, point toward, STR is really interesting. There are other companies doing, trying to scale just the STR 2.0 model. But again, just for our listeners, what's intriguing to me here is this optionality. So much option. You've got a good core business, but the optionality on all this land and these emerging places is huge. I do want to touch on one thing. Oh, sorry.
I just want to comment on a couple of things there because I think might benefit the audience that's listening. Completely right. Multifamily value add has been an absolute home run of an investment, and I have disliked that, and I've been wrong. Like a broken clock, there will be a time where I will be right? Like I will be right. But for me, when you start to see all of these people flooding in, the cash coming in, and we're talking, I don't know if it's billions, hundreds of billions, trillions of dollars, but it's such a well-defined asset class. And so many people are doing it with the exact same rule book. From an investment perspective, that's when I want to be selling, not when I want to be buying. I want to be buying when there's no asset, nobody's flooding the market, nobody's investing, right. Nobody quite gets it. That's when you build your position. And then when it becomes the hot thing and everybody wants it and must have it, that's the perfect time to exit. So what I kind of see in the multifamily space, and to be candid again, totally missed it, left a lot of money on the table, but I did so from a risk perspective. We start with risk management. When I worked for Steve Schwartzman at the Blackstone Group on day one, they recruited me out of business school. He said, I want equity-like returns with bond-like volatility and do not lose money, right? The show that we're on right now is called Compounding. You can't lose money and compound. So if you don't lose money, you have so much more runway. And so we start with risk management, and that's what kept me away from the multifamily space. What I kind of think is happening now is it's so well known. It's kind of like passing the hot potato, right? Like I create value, I sell it to you, you change the windows because I didn't do it, you raise the rents, then you flip it to someone else and they look at it and they're like, oh, we'll do the lobby or whatever. And then they flip it. And it's just, you're taking the same thing and flipping it to someone else, but the music has to stop somewhere. And then the question is, if you hold that at that point in time, is that a good investment? And what we're trying to do is we're trying to get the band together. We're trying to create the music. Right. And then when everyone's playing and everyone's dancing, we're going to leave the party quietly.
Well, it all comes down to this idea of generating alpha.
Exactly.
I mean, there's not a lot of alpha to be created in multifamily. I think probably, it will be a fine asset class for, in the future, but it just won't create those outsized returns, that risk reward profile you talked about. So, that's when you start looking at.
But there is some opportunities, I think, in the multifamily, and it goes back to some of these mega trends. So we think flexibility trumps certainty on a go forward basis. And so what I mean by that is historically, the way that we've learned to live in our generation for the last, call it 100 years is to sign a 1-year lease or to buy a home. That's what we've been taught.
Right.
And where you sign that 1-year lease or where you buy your home generally is dictated by your family, community, or your job. Well, with the advent of work from anywhere, we know definitively, we see it. And I myself live this lifestyle where I may not want to buy a home. I might want flexibility. And I may not want to sign a 12-month lease. I might want to sign a seasonal lease and chase the ski season, the surf season. I might want to do monthly. I might want to rotate and not sign a 12-month lease. So the opportunity I see in some of these multifamilies would be to do furnished rentals on shorter term lease. So like, I think the asset class itself will undergo some changes going forward because, why do you want to sign a 12-month lease if you can work from anywhere and you can travel the world and do that stuff? Not everyone,
right? Some
percentage.
Well, and you're right. There's always opportunity for innovation as consumer trends change. And I'll have to bring up at this point, Adam Newman made a big announcement. Adam Newman of WeWork fame made a big announcement that he's coming into essentially the multifamily space. And a lot of the real estate industry reacted by saying, oh, well, he's creating a property management company and calling it a tech company. I don't think that's at all what his vision is. I think his vision is very much along the lines of what you just said, which is rethinking multifamily from first principles. And how do people want to live these days? What about the community aspect?
Totally.
What about mobility? What about some hybrid between leasing and owning? There is a lot of opportunity there. I think the issue is most of the real estate industry has just sort of run the same playbook over and over and over and over and over. And ultimately, the risk and the reward, the big reward is in innovating at a fundamental level.
Look, it's that old adage about like the frog that gets boiled to death slowly and doesn't realize that he's being boiled to death. So I was interviewed by The Real Deal on the announcement of Adam Newman and his company. I think it's called Flow, isn't it?
Right, that's right.
And the question that they asked me is, he's focused a lot on the same mega trend that we've identified. And by the way, we've identified this and filmed YouTube videos and been writing about it for months, quarters, maybe even years. So this isn't like a pandemic idea or an Adam Newman idea. This is something that we formulated long in advance. But The Real Deal called and asked, what do you think about this community? Can you explain it to me? And what I found most interesting was they reached out to the short-term rental guy about community because all the big multifamily guys that have billion-dollar portfolios that they were speaking to just didn't get it, right? They like dismissed it. The incumbent doesn't see the disruption. You need a new entrant to disrupt. And the basic premise is this, having lived in New York City most of my adult life, I lived in high-rise buildings before I lived in a brownstone, but in those high-rise buildings, you have common areas called lobbies. Those are literally just corridors passing through. Maybe there's a doorman, maybe there's not, and you say hello, and that's about it. And in the elevator, even though you live in the same building, you're generally not forming relationships. If anything, you're anonymous. Again, community greater than anonymous. And so I explained to them, what if you lived in a building where everybody was drawn there for the right reason, whatever that reason might be? poetry, music, arts, literature, climbing, sports, activities. Now, all of a sudden, if you're in this community of like-minded people that have a similar passion about anything, you're likely to make friends and relationships, and many of those could lead to incredible life-altering relationships. I'm a member of a private club in Jackson Hole, Wyoming. One of those members, community, introduced me to Erica, who's now my fiance. Had I not joined that community, I may have never met Erica, and my life would be entirely different. So bringing people together in this community is really, really powerful. And I think that's the point that I made to The Real Deal. And what the guy said to me was, now I get it, right? Because the multifamily
right.
guys just missed it.
Well, I think, not to get too esoteric, but there's many industries, and I would say even my own industry, which is, banking, where fundamentally they haven't changed in 50 years.
Right.
But culture has changed.
Totally.
Preferences have changed. Technology has changed everything. And so there's an opportunity to look at first principles and say, wait, how do people, do I really want to get on an elevator and act like we're not on the elevator together? Or do I want to embrace community? And I think the pandemic showed, if nothing else, that we need community. We go crazy without community, right?
Totally. And I think that that's a huge opportunity. And so I don't know whether Adam will be successful or not, but I very much commend the approach.
Right. All right. Listen, as I said before we started recording, you and I could talk for hours. I do want to keep this moving along for our listeners. There is one thing, though, that you're doing that I think is super interesting and unique that I've not seen anybody else thinking about. And it's maybe, in the hospitality and lots of cities and towns across the country, there's a huge crisis in affordable housing and workforce housing. So as an example, you're here in the Outer Banks, which is a low population area. You're creating this destination. You're going to grow this over time, but you have to be able to hire people to work here. And so talk about what you're doing for workforce housing, because I think it's really, really interesting and very innovative. And it's, kind of a glimpse of what needs to happen in the future.
Yeah, look, I think at the end of the day, we are part of this community and we're ambassadors for this lifestyle and these wetlands and all the people that work here, and we're creating jobs. And our biggest challenge in scaling all of this, so I'll speak about EdgeCamp Sporting Club first, and then I'll talk about the broader community. Our biggest challenge to scale what it is that we're doing here is finding talent that can actually satisfy our needs. So we need to import that. And in order to import that talent, we need places for them to stay because there's no lodging, right? There's 3,000 single family homes on this island. Most of them are short-term rentals, and we can't afford the weekly rate for our employees. So we have to build workforce housing in order to satisfy our own needs. That said, that's not enough, right? We're big ambassadors of this area and this community, and we want to see many entrepreneurs thrive. So we want to see new restaurants open and new services and new athlete companies come here. So we're creating more workforce housing than we could possibly use in order to grow the community as a whole. And that's one of the biggest negatives about short-term rentals. I think it's misguided. A lot of people that are misinformed say short-term rentals are killing workforce housing. You and I were talking about Telluride, and the average price of a home is $6 million, and their short-term rentals are illegal. Well, I've got news for you. The workforce people are not renting $6 million homes. Like, that's just never going to happen. So rather than get to a place where it becomes not sustainable and we tip over, we're building in advance. And one of the things that we're taking advantage of is Dare County has introduced some new workforce housing zoning that it makes it easier to get more density and so on. And our civil engineer that's worked on, I think he said about 12 or so projects, not one of them is penciled and nobody's broken ground on it. We're the first people that are going to be doing it. We feel really great about it. So not only are we creating jobs, but we're creating workforce housing for these people to live. And I think that that's the responsible steward that we are in the community.
It's going to be a requirement because we're at a breaking point already.
Totally.
You mentioned that I think even today, some of your labor, maybe your cleaning crew comes from off island.
Yeah.
So you've got, these workers driving an hour and a half each way that want to do work. They'd probably love to live on island close to where they do their work, but there's simply no options. And so I also want to highlight, though, the way that you're doing workforce housing here in the Outer Banks is a great example of the optionality we talked about. So the way Richard is doing it is you bought a single room rental property that you're refurbishing. and it happened to have some extra land that came with it. So you've got the land already.
Right.
You're already carrying the land. That's what you're using to build the workforce housing. So it's an example of when you can come into a place that's emerging and you can acquire assets, land with optionality, you can start to do things like this versus if you for example, if you buy an existing multifamily property in a city, you're not going to have optionality with that. You just
right. And not only that, what we talked about when we were walking through that is because the cash flow from the short-term rentals is so great off of this low basis, the workforce housing component, even though it'll break even or positively cash flow, that's not the investment, right? Like we've got this other engine that fuels that really important need that we feel really strongly about. But if our returns were, say, a third of what they are, our decision, that's why they don't pencil, right? So we're out here doing things that are unique and adding value, not only to our investors, but also to our community. And because we're early, we're able to do the right thing.
Yeah. It's an ecosystem approach.
Yeah, exactly.
Right? It's not just about building cool buildings.
Exactly. And it's important to know we're spending a lot of time because we're seated here in the Outer Banks of North Carolina. But this is just one property. We're doing the same sort of thing globally. We're looking at new opportunities. We're currently looking in the Caribbean. We're currently looking in different places for ski areas. We have an entire asset acquisition team that's looking with this mindset and this lens to acquire and continue to grow.
That's the perfect segue into the last area I want to explore on the business side. And then I want to talk about some personal stuff, which is the growth plan. So, you've got a huge vision. It's really exciting, fun. Where does that lead? What's the end game? Where does that lead over the next 5 or 10 years? And maybe even talk about some of the locations you're working on now, some of the locations you alluded to that you're thinking about for the future. And then what does this all look like when you get everything assembled, your grand vision?
Yeah. So, it's really, really exciting work because we're forging a new path, right? And so our, corporate logo, if you will, is this rhino. And the name of the fund is Stomp. I'll take a second to explain that, which is, I live in Jackson Hole, Wyoming, and people jump into Corbett's Couloir and they do all these aerials and acrobatics and it looks all fancy and all this and that. But the only thing that really matters is stomping the landing, right? And that's what it's called, stomping the landing. Because if you wipe out and you break everything, it doesn't matter what you did in the air. It only matters that you land and stomp the landing. So everything that we're focused on is exactly what you're talking about, and stomping the landing and creating this incredible portfolio that we will exit to an institutional buyer. We're finding more opportunities than we have capital, which is the exact opposite, right? So when you think about entering into an asset class or investing into an asset class, if you speak to your multifamily brethren or anyone else, they say,
opposite.
yeah, I can't take any more capital. We're closing. We don't know what to do. In fact, we have multifamily GPs that are reaching out to us and saying, hey, we're thinking about doing a fund of funds, or we're thinking about doing an emerging asset class. You're the best in breed. Can we partner? Can we JV? Can we do this? Can we do that? So one of the very easy things you can look at is the asset class mature? Well, one of the questions is, can you put more money to work? If the answer is no, maybe the best is behind it. We're in the exact opposite place in the short-term rental. We have way more opportunities than we have capital, which is why we're open and raising capital right now. And we're deploying it in areas that we don't have any competition. We have not bought a single property to date where there's other bidders, competitors. We're not paying over asking. We pretty much drive our own deal, which tells us that we're very early. And as we monitor those flows, that'll tell us whether to go, full send and full steam ahead or slow it down a little bit. But we're finding opportunities, as I said, in these experiences, in these sporting adventure type places. And the easiest way to think about it, if people don't really understand what I'm sharing here, is we all are very familiar with the company Patagonia, hold them in really high regard. In fact, the founder just gave away the company to preserve Mother Earth, which, I completely applaud and commend, and be fantastic if we're ever in a position to change the world for the better that much. But if Patagonia had small little villas or lodges at the base of the best climbing, at the best fishing, the best fly fishing, the best mountain biking, the best skiing, the best cross-country skiing, right? Like just that brand where, I'm just going to go sign up for that Patagonia experience. It's the best access, the best trainers, the best facilities, the best everything. That's what EdgeCamp Sporting Club is. And since there's nobody else that we're aware of that are focused on these adrenaline enhancing, excitement, fitness, wellness type of activities, that's what we're building. And literally, we can have one in every single outdoor sport and still have room for growth. And we could have two, right? We could have skiing in the West and skiing in Europe. So the opportunity set that we're playing with is massive. And I think it leads, when you ask what is the 5-10 year plan, I think once we build this, we will have many different opportunities to exit. And we will likely exit to either a private equity firm, a hospitality firm, or an action adventure sport type firm. But to have 3 potential exits is incredible.
Yeah. And again, I think that, this is a new model. It's a new asset class, and it's not something that, a big hotel chain, for example, can easily pivot to, because it's something fundamentally different. And as we said earlier, from the ground up, it's fundamentally different.
And from a culture perspective, you talked about that in terms of banking. The traditional hospitality players don't get this sort of light hospitality touch, because when there's an issue in hospitality, the way that they solve it is they hire somebody. So they throw resources and labor at the problem. We're doing everything with intent and design and forward thinking. So traditional hospitality is reactive. Kevin has a problem. He picks up the phone, says, hey, there's an issue, and somebody comes to your room, for instance. We're designing it forward. We say, we know who Kevin is. We onboard you. We know what you're coming. So everything is prepared, ready to go. And the way we design our properties are all intuitive. It's supposed to feel very warm and welcoming and inviting. It's almost like you've been here before and you know how to use all this. That doesn't exist in traditional hospitality, where they're used to having labor to tour you around and show you where this is and so on. So,
and I would say, to what you just said, once you experience that, which I've gotten a little taste of it this weekend, you understand what that means.
Right.
And it's a fundamentally different experience that, sort of, at least for someone like myself, makes the old way far less desirable. I do want to just, before we move on, because I want to talk a little bit about personal stuff, and then we're going to do a tour. But I'd be remiss if I didn't do a quick plug for Swell, who is the sponsor of this podcast, the Compounding Podcast. The challenge is, you might hear what Richard says and say, wow, that's really exciting. I'd love to invest. And you are raising money. But like most real estate private equity firms, you are currently limited to accredited investors anyway, which basically means you have to be a millionaire to invest with Richard. And you have to know what you're doing, right? You have to have some expertise. That's why I ask all the questions I ask. What we're trying to do at Swell is we're creating what's called a Reggae Fund, and we're opening up investments like this to non-accredited investors, to regular working Americans who would love to invest in opportunities like this. And I happen to believe, when I sort of discovered the whole real estate world many years ago, it blew my mind, because there is that opportunity you talked about to have an asymmetric return, right? So underlying everything in real estate is a hard asset. And if you do a good job buying those assets, your likelihood of losing principal is very low, but you've got all this opportunity for upside beyond market returns. And that's been my experience over 10 plus years personally as an investor, a lot of it in multifamily, but now looking at other asset classes. So I just want to put in a quick plug that, check out swellmoney.com. And we are going to be working with private equity firms like Stomp to deploy capital in these emerging asset classes.
Which is fantastic, right? I mean, it's like the democratization of what's working really well for millionaires and billionaires and so on. So kudos to you.
Thank you. All right. Well, let's move on. I want to talk a little bit about your personal life, if that's okay.
Of course.
Because the real purpose of this show, Compounding, is when I named it Compounding, I didn't just mean in a financial sense, right? It's great to learn ways to compound your money at extraordinarily high rates and build wealth. But what it really referred to is compounding in every area of your life. So the idea was, I want to sit down with cool people who are doing cool stuff and who have done it for a long time, and ask them, what have they learned? And so I guess my question for you is, you've had a long, successful career in business. You were on Wall Street, and for the past several years, you've been doing your own thing, lots of exciting stuff. More than most people, you've lived for experience, and you've been there and done that. That's something I think we have in common. And so what have you learned over the years about, if you were talking to your 25-year-old self, 25-year-old Richard, what would you tell them about, building a great life, balancing career ambition with family and hobbies and adventure? what are some of the lessons you've learned about just building a great life? Because I think it's safe to say you've got a pretty great life, at least by my observation.
Yeah, no, thank you. And I'm very grateful and fortunate. And, I think a lot of the thinking and so on has worked. And I'm also very optimistic about the future, right? Like if you look at my tweets, I always say the best is yet to come. And that eternal optimism, I think, is a superpower. And so if I could share with the listeners that, you have the opportunity to change your mindset. You can look at something from the glass half empty or the glass half full perspective. You can either be, grateful and excited about the future, or you can be stuck and limited in the way that you're thinking about it. And so I've always had the great, through my father, who was an entrepreneur, completely self-taught, dropped out of middle school because he was born post-Great Depression. He was an American. My mother was Costa Rican, also with limited education, so limited formal education. So I was born in Costa Rica. Spanish is my first language. I'm the first person to graduate middle school in my entire family history.
Wow.
High school, went to an Ivy League college, went to one of the best MBA programs, also Ivy League. So double Ivy, and completely self-made. My father had no, Wall Street roots or anything. In fact, when I graduated high school, my father asked me if I wanted to join the family business. And that would have been the path of least resistance and so on. And he was quite successful. He was one of the first, literally one of the first mail order entrepreneurs on the planet. And then when I was growing up, mail order became everything. And it's kind of like the internet today, right? So in some ways, he was like the Jeff Bezos, not anywhere near as successful. But when he started his business, the concept in 1946 was, I'm going to mail these products to people all across the country. They're going to pay me in advance for something that they have never seen. And they're going to trust that this guy in the Bronx is going to mail it to them and they're going to like it. And everyone thought he was absolutely crazy. They were like, no way, that's impossible. And so he designed things like, I'll guarantee it, full money back, things like that are now common and obvious. But in 1946, they weren't. And check this out. There were no credit cards back then. So he would get paid with like stamps, right? So like my background comes from anything is possible, everything is possible, and always be thinking about the opportunities. And so I've lived a very rich life with that background. And I told my father at the time that I didn't want to live his dream. I wanted to live mine, and I wanted to go to Wall Street, and I wanted to prove myself and make it on my own. And he thought I was, somewhat crazy and also somewhat proud of me. And so he did like Patagonia. He gave away his company to his employees. And some of them had been with him for decades, and it broke his heart, but they actually bankrupted the business. Even though they were running the business for years, the genius in what my father did was the product selection, the marketing, the pricing, the identification of the opportunity, not the fulfillment. And so I've always had these like grand visions and great opportunities. When I graduated college, I skied 100 days in Crested Butte, Colorado. I turned down all the jobs that I was recruited for and said, I'm never going to be 21 again. I'm never going to have this opportunity. And so I moved to Crested Butte, Colorado, and I skied 100 days with my girlfriend, who then became my wife, is now my ex-wife. And so I've always prioritized the outdoors and experiences. And I think that if I was to tell my 25-year-old self anything, I think I've really tortured myself in terms of worry and saying like, am I doing the right thing? Like, have some faith, have some grace, go for it. It's all going to work out. Have that confidence, have that conviction, and recognize that like our limiting beliefs are what hold us back. And so to embrace it even earlier and faster and more and go bigger and harder probably would have benefited me even more. But, I have nothing to complain about. I'm so grateful for everything that I have.
Well, that's amazing. And that, that mindset, I'm seeing a common thread across the people I'm interviewing, that mindset. And by the way, we're about the same age. I'm 51 years old. And that's sort of my, secret weapon, if you will, is this mentality of, I always feel like I'm just getting started, no matter what. Because what I think young people, everybody comes to understand eventually, but it's hard to embrace when you're young, is that, the challenge and even a little bit of struggle, that is the reward. There's no finish line out there. This idea of retiring and doing nothing is a path to misery. And then for me, the other thing I'd add, and I think you probably share this given what you just said about your skiing adventures, is I think it's also important to have something in your life where the measure is not money.
Right.
And I suspect that even the way that you approach your business, I mean, obviously you want to turn Stomp into a multi-billion-dollar company, but that's not the why for you, right? Your why is creating beautiful places like this.
You know, if you focus on the money, I think that's limiting. If you focus on your passion, and you know, for us here at Stomp, on the hospitality end of it, we make memories. That's literally what we do, right? We want people to come and thrive and enjoy and make memories and be with their friends and families and loved ones. And if we do that successfully, the money follows. But if we focused on the money, we're making decisions for the wrong reasons. It may not make those memories. It might be a half memory. So I think you're totally right. And I think to your point, the eternal optimism mindset is a superpower. And you literally have the choice. You could look at any adversity. You know, I got let go after the great financial crisis. So I was a co-head of investments of a $4.5 billion fund at the peak of my career through a great financial crisis. Had nothing to do with me. I didn't cause it. But one thing I learned was you never want to be a co-head in a downsizing. So what they did was they let both of us go and they hired one person to replace us. And that setback at the time, you know, felt like the end of the world. But literally, I just was like, I don't know what's next, but it's going to be fine. I started running with my dog, Guapo, and I would just go out and run and get creative and start to think about it. And I decided not to follow Wall Street anymore and to go out on my own. And that was a life-changing opportunity. I don't know that I would have ever had the conviction to walk away from that hamster wheel because the pay was so good and the responsibility was so good and the ego was so good and all of these things. So like that setback was the launching pad for the next opportunity. Same with my divorce. At the time, I was crushed. I was like, oh my gosh, I don't know what to do. Like everything I know, I'm all about family. This is different. What do I do? But I wasted no time. I said, you know what? I have not one day to like bemoan all of this. I'm going to move forward. I don't know what it's going to look like, but the best is yet to come. And I'm going to go after it. I moved from New York City to Jackson Hole, met my fiance there, and we couldn't be happier. It's a totally different, you know, the second journey I said from the get-go was going to be better than the first.
Yeah. And I think what you embraced in that process is something I talk about a lot, where doing things increases your surface area for serendipity. Exactly. So what seems like might have been lucky or happenstance events actually wasn't, because you were out doing things. You were being creative. You were trying things. You built a YouTube channel, and you know, when you do that, nothing but good things can happen. When you're taking action, nothing but good happens.
You know, it's so interesting that you use the word lucky, because when I met Erica, initially I was always humble, right? I try to be understated and humble and just grateful for what it is that I have. You're not going to see me posting flashy things about my lifestyle. And so in that attempt to be humble, I would explain the success I had either on Wall Street or in Jackson or here in the Outer Banks as I got lucky. Right. And one day she changed my life. She said, you can't keep using that word lucky. Like, what are you, a effing leprechaun? And I was just like, wow, no, I'm not a leprechaun. And it was that same sort of recognition that I'm creating these opportunities for luck, or I'm putting in the work in advance. And so what seems, and don't make, look, luck plays a component of it. You have to be in the right place at the right time, but you also have to be prepared and open and thinking. And so I think the people that count on luck as a determining factor are using the wrong words, and the word choice is really important, right? So now I say that I was prepared, or I was excited, or to your point, we created this ground surface that created all these different opportunities. And then luck is very important too.
Well, you know how in a sweepstakes, often there's a disclaimer at the bottom that says must be present to win.
Right.
I think that's how life works is, you know, you have to show up.
Exactly.
And you have to show up every day. And if you show up enough, you're eventually going to get quote unquote lucky. I happen to believe luck plays very little role in success. Luck can be a multiplier in the magnitude of the success, but it has very little to do with actually who's successful and who's not.
Can I give an example of that? So
absolutely.
We've attracted an incredible team here at Stomp Capital, like literally world-class people, excuse me, that I would not be able to recruit, right? They were never leaving their jobs to go to a startup. And so I could say I got lucky by attracting them. But the reality of it is I've been working in the short-term rental space on passion type investing. And what's ended up happening is by putting out this content on the YouTube channel, on Twitter, and on so on, it's attracted like-minded people, and reverse inquiry, they're drawn, like we're pulling them. And consequently, they're walking away from these jobs that literally, we have somebody on our team that nobody's ever left their firm in 17 years saying, I'm walking away and I'm coming to join you. The club that I mentioned in Jackson Hole that I'm a member of, the Caldera House, Google it if you don't know it. Award-winning, best of class, blah, blah, blah. Billionaires are members. We have the person that was their construction manager, opening managers, created all their systems and hired hundreds of people over time, ran it for 6 years, ultimately rose to be president of the Caldera House. She's our chief operating officer. And so through creating these passion projects that are really interesting to people, you get people that are drawn to it. Absolutely. And I could say I was lucky because they reached out to me, but it's not luck. I've been creating this content for years.
Right. And it's incredibly powerful. It becomes virtuous. Same thing on my end. Our last 3 hires at Swell came through Twitter. And so by definition, you're getting people who already believe in the mission. And so they become the best employees. They become ambassadors of your mission. Exactly. And it becomes self-fulfilling because it then attracts more people of like mind. It's a really powerful thing.
And that's a competitive, sustainable advantage, by the way.
Absolutely. It's culture.
Yeah.
It's culture ultimately. Yeah. And the last thing I'll say here is, it's worth noting that Richard and every single guest I've ever had on this podcast doesn't have to be doing what they're doing right now. Like you could be skiing full time, but I think a big part of it is people like yourself realize that that's not the path to fulfillment. The path to fulfillment is to do cool stuff and be with cool people. There is no end game. That is the end game.
There was a period of time when I moved out to Jackson Hole where I thought I'm going to get a ski pass and I'm going to ski every single day and I'm going to do all that. And what I've ultimately realized was that was a timeout. That was a pause, that
Sure.
my mind never stops and there's always opportunity and there's always great things. And to your point, it's so incredibly rewarding and fulfilling to aid this community, to grow this community, to tell this story, to bring like-minded people here to experience the kiting and all the other things. And then from our team perspective, I'm honored and humbled that people trust their career to me and what it is that we're building and growing here, and that investors take their retirement proceeds and other proceeds and trust us to invest on their behalf. And so I feel very, very honored that I have this opportunity, and it's incredibly rewarding.
And it doesn't mean it's easy. I think, my personal story, very similar. When we moved to Boulder 4.5 years ago, I thought I wanted to be semi-retired and, be a full-time rock climber, essentially. And that lasted about 3 weeks before I took on my next challenge. And, so I took on another thorny challenge, which became Swell. And there are occasional moments where I ask myself, why have I gotten myself, what have I done to myself? But that lasts a very short time, because then I realized, this is exactly what I wanted. Like this is the thing I wanted to be doing. I want to be doing the hard thing.
Look, I think there's levels of satisfaction at a human level. Monetary gain is one, but it's so much more shallow than contribution, where you're growing communities, you're growing people, you're giving back. Mm-hmm. And there's definitely hard days where Eric and I sit there and say, what did we sign up for? Like, why are we doing this?
Why are we doing this again?
But the reality of it is that's very fleeting. And then at the very next moment, we have a choice. We can make a decision about an investment A or B. And we always focus on the team that we have, that have entrusted us with their career. And we make the right decision for our team, taking us out of it, even if it means we sacrifice or we invest more or whatever. And look, at the end of the day, I'm the single largest investor in Stomp Capital. I have north of $10 million invested side by side with our LPs. So I'm doing this for me and my capital and inviting others to co-invest. And when you have that lens where we're not doing it for money, it allows us to have a longer term view. And that's a competitive advantage. If we're focused on monthly returns or quarterly returns, it'll drive a certain type of investing. If we're focused on like the next decade or the next generation or these mega trends, it's a very different outlook. And the person that I would point to, not to suggest that we're Jeff Bezos or anything like that, but if you think about it, when he launched Amazon, everyone laughed him out. He's going to be bankrupt. He's going to be bankrupt. And he didn't turn a profit for, a decade or more, 2 decades, I think. Now he's the single wealthiest person on the planet. And his thing was a totally different time frame.
Well, that's exactly right. And I think many of our listeners are probably too young to remember back when, the original .com bust happened. The headlines were literally Amazon.bomb.
Right.
And it was very unclear that Amazon was going to make it. And even at the time, which like in retrospect, it seems like, well, of course, Jeff Bezos focused on the long term. The time that was really controversial, that he was saying to investors, you should sell your Amazon stock if you're looking for short-term gains, because we're not playing that game. It was very bold at the time to say that. And obviously it worked out because he built something fundamentally different. That's the only way you're able to build from first principles, is if you're willing to look beyond the short-term gains. And I think in real estate's interesting because most real estate is focused sort of definitionally on short-term gains because you invest with a private equity firm. You want your mailbox money starting next quarter, and you want your IRR, after 3 years through a refi. And this is what you're doing is a little more entrepreneurial.
Yeah, well, we have a balanced outlook, right? Yeah. So about 50% of the portfolio are cash flowing assets to satisfy that demand that we all have. And then 50% is more on the development end where we have a longer time frame. Right. And that's actually something that I think is really interesting for prospective investors through Swell or directly through us, which is that it's unlikely that many of these mom and pops that might go buy a cabin somewhere are going to get the development ups that we're experiencing, right? So it's a way to actually co-invest with people that have great experience and great ideas in something that you wouldn't otherwise be able to do. And likewise, we do larger projects, right? So a lot of people that could go out and buy, say, $1 million cabin, we find opportunity in this orphaned area where mom and pop maybe played a 1 to 5 million, and then hotel and hospitality companies are 50 to 100 million. Right. There's not too many buyers in that 10 to 50 million. So we're always looking for opportunity.
Yeah, that's right. Well, this has been incredible. Actually, when we pivoted to the personal stuff is always the most interesting part to me, and hopefully useful to our listeners. One last question that I ask all of my guests is, what's one thing you're looking forward to right now?
Oh, wow. I have so much to look forward to. Let's see. Well, I'm really looking forward to, I'm going to answer this I'm going to hedge my bets. I'm really looking forward to Reconvene, the conference that really brought you and I together on Twitter. I have the privilege and the honor to speak on stage as an emerging talent. So I'm really excited to tell this story more broadly. And then on a personal level, Eric and I are building a house in Jackson Hole, Wyoming, actually in Wilson. So we're going to spend the winter there this winter working with our architects and designing all that. But it's kind of amazing. I've created all of these wonderful experiences for everybody else. And yet I feel like I'm the cobbler with holes in my shoes. I'm neglecting my own sort of like quality of life. And I'm really excited to take our quality of life to the next level. And I'm doing it in an inspired way because I very much believe in views and the outdoors and all of that. So what I've shared with Erica is we're going to, over time, start to invest in because we've been together for 3 years. So what we're living in currently are my short-term rentals. I was leading a nomadic life. And when we would exit, then we would short-term rent it. Now we're living a life together. And so we want to stop renting our personal homes and start to build our homes. And so everything that we're going to build going forward is going to have inspired views and outdoors and keep us in peak energy. And so from a longer term perspective, I'm excited to get like our personal life in order.
And I'm going to bring this full circle because I started this podcast by saying, someone told me years ago that the secret to a great life is doing cool stuff with cool people. Yeah. Your answer to that question of what are you looking forward to was basically you're looking forward to doing cool stuff with cool people.
That's all we do. And you clean it up. I've been saying though, on my short-term rental channel, cool S with cool people. Right. And it's totally true. And when you have that, I just want to share one thing to your listeners, because I think it's really easy to say cool stuff with cool people. But when you have that lens, a remarkable thing happens. You can say no. And so if it's not cool stuff, we just don't do it. And if it's not cool people, we just don't do it. And the power to say no, giving yourself permission to say no and not chase everything, leaves your calendar and your mind and everything open to say yes to the right opportunities.
Amazing. And by the way, Richard, yes, you're right. The saying is actually do cool shit with cool people.
Right.
I promised my team I would clean up my language on the podcast. They said I was cursing too much, but I had to. It somehow is more impactful when you say cool shit.
It's true. And look, I think the one thing that I would leave anybody with is I think we've all been taught to be opportunistic and say yes and do everything. you really need to refine and hone in and know your why and move towards that. And if you keep moving towards your why, you'll have greater success with more fun and more passion. You'll attract like-minded people. And so get to know yourself a little bit, know what moves the needle for yourself, and get into that passion, and you'll do amazing things.
Amazing. Listen, we're going to transition. So don't stop listening / watching quite yet. We're going to do a MTV Cribs style tour of this property, and I promise you want to stay tuned for this. It's pretty amazing. So we're going to transition from the interview to the tour. But before we wrap this piece, where can people find more information on you? I'm sure you know, a lot of my listeners probably follow you on Twitter, but where can they get more information on Stomp and on yourself?
Sure. So on myself personally, check out I'm Richard Fertig, Fertig. On Twitter, I also have my own website, richardfertig.com. If you're interested in doing it yourself, check out Short Term Rental University, or STRU, on YouTube or on the website. We filmed 500 plus videos totally free, changed the lives of hundreds, thousands probably, in creating this opportunity for themselves. And then as far as Stomp Capital is concerned, stompcapital.com, or follow us on Twitter at Stomp Capital as well. Just really honored to be on your show, and grateful for every listener's time and attention. I know time is precious. It's our most important luxury. So I very much appreciate everyone's time, and your time, Johnny, your time for coming down here. I mean, this guy landed at like midnight and drove here for a couple of hours. So really just very grateful. Johnny's the unsung hero of the Compounding Podcast, because the truth is, all I have to do is show up at cool places and start talking. He does all the work just to make it easy. So yeah, agree. Thank you, Johnny. This has been awesome. Let's go tour this property. Let's do it. Thank you.
Hey guys, we're in the beautiful Outer Banks of North Carolina. We just finished recording a great podcast with Richard Fertig, and now we're going to show you what we were talking about. Welcome to the EdgeCamp Sporting Club.
Kevin, thanks for coming to EdgeCamp Sporting Club.
Absolutely, long time no see.
I know.
All right, well, tell us about this amazing place.
Okay, so this was all custom built. We started 2 years ago. It's 14 bedrooms, 12,000 square feet, custom built for short-term rentals, with a focus on people that want to access the bay, which is directly behind us. Here we call it the Sound. And so outdoor activities, kayaking, stand-up paddleboarding, but the real thing, although you wouldn't tell today, is kiting. This is one of the best places in the world for kiting instruction, for advanced kiting. You can do these downwinders. So we've got 2 outdoor showers over here. You want to follow me? We'll do the outside and then we'll go inside. So, oh look, we have a little friend here. A little bit of nature came to say hello. So we've got 2 outdoor showers here with hot water. And then because we have 14 bedrooms, every single bedroom gets their own locker so that you can take your wetsuit off or your bathing suit or whatever and dry it. No one's messing with your gear and you're not trying to find your stuff. It's all here.
And one of the things you're talking about doing long-term is a membership model where people can actually keep their stuff here.
I want to show you that. So we've got room for expansion. And what we will do as we gather the members is create dry storage, so people leave all of their belongings here. You leave your kite, you leave all your equipment. When we know that you're coming here, we can get it out in advance and put it in your lockers and so on. But now we take and eliminate all of that stress and hassle. And I know Johnny, who's filming here, he's got this huge gear bag. And the stress was,
well, what if it gets lost or delayed or doesn't really come? So by having everything here, not only do we create, raving fans, but we also minimize, hassle and inconvenience, and it's very sticky, right? So,
as someone who travels a lot for climbing, I can tell you that getting your equipment to the different destinations is a huge hassle, so that'd be very appealing.
You'll see we added a pool and a cabana. It's got outdoor television. This is basically a place where people can come and recreate, and if it's not a big wind day like today, you've got incredible access to the water and views and pool, and we've got 2 hot tubs, one over there in the corner, one up there, so we can put 18 people in a hot tub, which makes sense, and we've got a fire pit here and in the other place, and we just really understand who's coming and what they're doing here, and we want to enable the creative excitement and energy to come and just relax and enjoy with friends and family.
Also worth mentioning, Richard, that Stomp Capital owns all of the surrounding land here.
Yeah.
So you have control over what happens over the next few years.
Yeah, so we own 50 plus acres. We're the largest landowner here on Hatteras Island. This is a big vision and a huge opportunity. We bought it right, which means there's tremendous upside. But consequently, we own the HOA. We are our own neighbors. There's no complaints. Like last night we had live music. We had a fire dancer. We were creating these experiences that we talk about. You got to experience it firsthand, and we don't have to worry about disturbing the neighbor. We are the neighbor. Yeah, so last night we had a live musician over here, and we had a fire dancer entertaining, and then afterwards Kevin and his wife went to one of the hot tubs, and Team Stomp sat around here. We had s'mores, and everyone was just having a great time, and like that's really what it's all about, right? Just like relaxing, unwinding. We're all working hard, we're all playing hard, and it's that like living life to the full that we embrace. So this is one of those elements.
Yeah, when Richard talks about, experience trumps luxury, I mean, obviously this is a luxurious place to stay. We happen to be staying in the villa over there, which is sort of a semi-private space, but it's really the experiences that Richard's team creates that take it over the top. So everything from the meals to the entertainment, everything you'd expect from a world-class resort, but in a place that feels like home.
And what we talked about was that it's all a la carte, right? So when somebody books our place, we onboard them and ask, what does success look like, and who's coming, and what are you doing here? And then we offer them a suite of amenities, from bike rental, stand-up paddleboard, kayak, to instruction, kiting, surfing, to chefs, to fire dancers, live music, DJs, oyster shucking, beer tasting. I mean, you name it, it's completely customizable so that your vacation is exactly what it is that you're looking for. And the best part is it's all a la carte, so you're paying for what you want and you're not paying for anything that you don't want. And consequently, it's really value added to the guest, and it's quite profitable to us. We charge 12% markup for all of those extras, which goes actually into the fund and benefits the LPs.
Yeah. I mean, you can imagine already, just if you're a big group, a family, or a corporate event, how this is just so far superior to staying at a big resort with lots of other people and kind of generic experiences.
And people love it, right? So 2 thoughts on that. One, we had a guest who spent about $40,000 to rent the place out for a week, and then those add-on amenities that I just talked about, 3x that, $120,000 for the week of just ancillary services, chefs, and so on. So like this week cost them about 200 grand to stay, and then those concierge services that I talked about, we're doing something so unique and so different that 2 separate guests this summer reached into their pocket and gave $500 gratuities to the concierge team for making their vacation so special.
And those prices might sound a little out of reach for most people, but worth knowing that your plan is to build a bunch of structures or buildings of different sizes, right?
Totally. I mean, what we're talking about here at something this big is corporate retreats, off-sites, which is a huge untapped market. There's not a lot of places where you can do all this in nature and connect and come together.
I was just asking Richard earlier, from an investment standpoint, what's the carrying cost of all this land? And the carrying cost is minimal, right?
It's de minimis, because we bought the land so inexpensively. Our basis is so low. The taxes are really low on undeveloped property, so we can hold it indefinitely. We have no debt on it, so it's actually a very safe, sound investment. If you take a look at some of the smartest people in the world, like Bill Gates is massively acquiring as much land as he possibly can. They're not making any more of it. It's a real asset, and historically land appreciates over time, especially if you get to a place early and it's desirable. So in my personal opinion, having access to this water that was inaccessible due to the bridge and lack of infrastructure, and is now available after North Carolina put in $1.5 billion to make it accessible and guarantee it for 100 years, my personal opinion is the price continues to rise.
Yeah.
All right, let's go inside.
Yeah, so we're on the upper floor now, which is the main open space of the property. And I was telling Richard that what's amazing about this space is it feels like a home. It's warm and inviting, but it's also super flexible. In fact, you guys had a meeting here yesterday.
Yeah, we do corporate offsites here, so we were meeting with our branding agency as we continue to expand, but everything has been thought out. So we have outlets and plugs and HDMI and smart televisions and blazing fast internet, so that we know that like you can come here and you can actually work. All of this furniture that you're looking at here, like this table, is all custom made. The rest of the furniture is hospitality grade, so we're using single family homes but hotel and hospitality grade furnishings so that it'll last for an extended period of time. And here's just sort of like a one living room area with a gas fireplace. And what you'll note, again, with intent, we have very little art. It's not because we don't love art, but it's because we love the water and the views even more. So we want to direct people's attention not towards televisions and art, but rather really focus everything to be outside and outdoors and looking at the beautiful nature and wilderness, and come out here and we have, you know, outdoor dining. So again, because this is such a large home, 14 bedrooms, we know that there could be 20, 30 people staying here, we decided to put in a commercial kitchen. And whether the individuals that are renting the place cook themselves or they use one of our many chefs, we wanted to have a very professional kitchen environment so that you can create world-class cuisine. When our chefs come, we always ask about dietary preferences and so on, but there's a real bent and focus on natural like ingredients from the area. So we had the other night fresh line-caught tuna caught the same day. We had local oysters, local greens and heirloom tomatoes, and so we can tailor that to anybody's desires. But you can see, you know, a commercial kitchen found in a single-family home meant to produce food for 20, 30 guests at a time. Throughout the entire property, we've got dishwashers in the right place, so we probably have 6 or 7 different dishwashers in this house. We have ice machines on every single floor. We've got little like kitchenette areas, which I'll show you as we go down. But again, talking about sort of like the nautical theme and sails, these are sail chairs and, you know, sailing sort of enhanced pillows. We have a screened in patio, so if you wanted to have outdoor dining and it's inclement weather, or, you know, get no bugs in there. So we just really understand who's coming and what they might use the place for. This is where we filmed the podcast before. We kind of call this the bar and work area. So we have a lot of people that sit up here and use their laptops with incredible views. We have built-in coffee maker, and this is a coffee station and a bar. Again, you'll see an ice maker and a dishwasher and little areas for people to sit. So this is our most recent addition, Kevin, and you toured the inside. This is a 6-bedroom house, and you can see consistent architecture but not identical. Fire pit, pool, hot tub, grill, outdoor shower, electric voltage charger. So we kind of know who's coming and we enable it. One thing that's really important for people to recognize is if you see that seawall there, we know that we're in an area where there's hurricanes and storms. It has been, you know, forever, and it'll likely continue forever. So what we've done is we build a 6-foot seawall. We've put thousands of cubic yards of fill in there. It costs us hundreds of thousands of dollars to do that, but we're protecting our investment and the environment for a long term.
Yeah. One thing I love about this concept is if you're a discriminating traveler, and even if you stay at a really nice resort, you may or may not have the best view. You certainly won't have a balcony this size. And with this kind of concept where there's shared spaces, you get amazing views everywhere, and you get access to balconies.
Every room.
In every room. And huge ones.
Well, we know that you're going to go out there and you're going to read, or you're going to work, or you're going to have your laptop, or you're just going to want to have a cup of coffee there. So yep. We just put them in every single room, and that way everybody has a master suite. The floors are pretty much identical, except that this space that we're in right now is sort of where we do yoga indoors and also massage. So when somebody says that they want massages, this is where they set up the tables. We have great people that come and do all that. We've had guests that say, we want 2 masseuses every single day from 12 until 6, and that way guests don't have to really think about when their massage is. They just wait until it's available and free, and that's it.
I think I'd like to book a massage.
Yeah, right. I would too. Completely.
One small thing I want to point out, just if you're a frequent traveler, The value of being able to just do your laundry quickly when you need to on your own is so huge.
Totally. In fact, our team that was here for the offsite, our team needed to recharge because we've been living out of like suitcases on the road. So everybody used the laundry.
Yeah, when you're living out of a suitcase, little things like that make a huge difference.
So let me show you what we call our garden room. The ones that face the back of the property all have double beds. And again, they all have huge balconies. You can see our luggage racks, upcycled used kites. This kind of cool, these lights here, not only do these work as night lights, they also have USBs and a little place to put your phone. So now every single bed has a place to charge your phone with design and intent. And I'm going to bring into the bathroom here, really clean, modern. You can see once again on the art selection, it's all about kiting, which is what's bringing everybody here. And then unique to this area here, we've got in the bathroom, if you can see that, it says Slick Calm. The area that we are right now is called the Slick, and we want calm waters. So it's a natural wonder for kiting because the winds are really strong and really consistent. But because of this little barrier island called the Slick, the water is nice and calm. And so that's the best of both worlds. You have like really strong blowing winds and really calm water, and that allows you to have control and stability and do a lot of fun things. So you won't see a lot of televisions throughout the house. In fact, we made the conscious decision to not put televisions in each room. Because we have this vision and we're trying to direct people's attention outside, we decided to instead put art where the television would go. But to retain the optionality in case we were wrong, it's all pre-wired. So we could remove the artwork if we wanted to and then hang a TV. Every single person that we spoke to told us we were crazy to not have televisions in each of the bedrooms. You know how many guests have asked for a television in the bedroom?
0.
Exactly 0. So sometimes you have to follow your gut and instinct and know what it is that you're doing and who you're doing it for. And we know our guests better than perhaps everyone else. Yeah. And so consequently, it's a non-issue. Here, once again, we have a little sort of like kitchenette. We leave out snacks and kind bars, some Outer Banks saltwater taffy, again, sense of place, local treats where we can. We have a little mini fridge that's usually stocked for guests, and then every floor has its own ice maker. So once again, if you're living on this floor, this is where you're staying. You don't have to go up to the kitchen. You've got everything that you want right there. So, like I said, on this floor, it's identical layout. We've got more washers and dryers and more of the themed kiting little end tables here. But what makes this floor different is this gym. So above us, we had that yoga, stretching, massage area. And here we've got a small gym that's functional with a treadmill and a stepper and a Peloton. Gets you direct access to that yoga and stretching place and a hot tub. And then on this side of the gym, we have more decking and outdoor seating with, incredible world-class views. And although I'm not a runner, I can't think of a better place to stand on a treadmill than, right here and just get my workout on.
So it's now when we have the bench press competition?
I think I'm going to lose that one. So let me share with you now what our king bedrooms look like. And again, you'll see, consistent design-orientated decisions. Here we've got a king bed. But again, you'll see outdoor space, very clean, large bathrooms. Everything is en suite. And this is what I was talking about. This is actually pre-wired for the television. But instead of having a television, we've got a really nice artistic kiting sort of piece of art. These QR codes here are to facilitate people in their Wi-Fi. So all you have to do is point your camera there and you connect to the internet.
That's cool.
One of the things we talked about a lot on the podcast before this was about optionality. And I was explaining to you that when we built this home, we had no proof of concept, right? We were doing something that no one else had done, nothing quite this big, nothing quite at this nightly rate. We were trying to pull people here to this island that it didn't have like this kind of demand before, or I think it had the demand, it just didn't have the supply, so we created the supply. In order to keep our costs down and our optionality open, we put the elevator shaft in place, but we didn't spend the money on the elevator our first season. We opened up and we didn't have an elevator. And now that we have proof of concept, we have an elevator so that when our chefs or when Johnny comes here with all of his podcast equipment, he's not carrying it up. We're in here and we've got an elevator. Or for people
Come on in, Johnny. There's plenty of room.
Yeah. And then on this floor
Amazing.
is just another communal area. Here we've got a little foosball table, and believe it or not, between the ping pong table and the foosball, this is where everybody hangs out, or the fire pit. It depends on the weather and who the group is, but all of these little group activities, you know, it seems sort of like obvious, but they get really, really used. People love it. In fact, when our Stomp team is here, we always have championships. It gets really heated and quite competitive, so a lot of fun.
What I love is there's not a place you can go in this house that doesn't have a spectacular view. The entire house has windows everywhere. I mean, everywhere you look, it's just spectacular.
Yeah, I'm very much view driven, and I think a lot of creativity and inspiration, excitement and energy comes from the water and the views, and so all of the stuff that we do custom built is that theme.
Well, I like what you said earlier, the view is the art.
Exactly, that's exactly right. So, and then out there you can't necessarily see, but we've got a couple of moorings. Yesterday we had some jet skis delivered for Kevin and his wife. Just go right off the dock. If there was more wind, people are kiting around here, stand-up paddleboarding, kayaking, you name it. We get pontoon boats for guests that go out and spend the day out on the water. So it's just an incredible, beautiful, unspoiled section of the world, and we're really fortunate to call it an opportunity for ourselves and our investors, and we very much appreciate the nature and the beauty and trying to enhance and preserve it. And we're not out here trying to pave paradise and put up a parking lot. Quite the opposite. We're actually trying to maintain and preserve as much as possible and have people enjoy it.
Yeah, I feel like I'm sounding like a paid spokesperson, but it really is an amazing place, and pictures and video don't do it justice. My wife and I have traveled all over. We've stayed in all the nice places, and I think this is the future. I really do. I mean, this type of experience, once you've done it, it's hard to go back to anything else. And if you've got this option wherever you want to go, why wouldn't you take it?
Well,
awesome.
Thanks for coming.
Yeah, great tour.
Johnny, thank you. Everybody, thanks for your time, and please come visit us at EdgeCamp Sporting Club and or Stomp Capital.